To you all friends, I am Sanjeev Singhal, Chairman of the Auditing and Assurance Standard Board. I, on my behalf and on behalf of my Vice Chairman CA Vishal Doshi ji, welcome you all to this 84th program for this council year for the Auditing and Assurance Standard Board. Friends, it's been the endeavor of the AASP to take the auditing standard learning to the doorstep of every member. And this program is also an attempt in that direction. We have covered so far all the auditing standards. We have covered Schedule 3, CARO, and specialized topics. And in fact, we have run a helpline from 16th of April to 30th of September to answer the auditing matters related query of our members while doing the audit of companies as well as non-corporate entities. And we had a panel of 50 experts. Those experts have worked day and night and provided these free services on behalf of the Institute of Chartered Accountants of India to all our members and have bridged this major gap, where the members were stuck and this was provided. We also had an expert panel for bank audits, which was from April 1 to April 15. So your institute cared for its members and in order to improve the audit quality that's been done. Friends, today's topic is using the work of another auditor and auditor's expert. Very important area because if an auditor is using the work of an internal auditor, or if the auditor is using the work of a component auditor, then to what extent he can place reliance, that needs to be discussed. Similarly, if the auditor is using the work of an expert, whether it is an actuary or a valuer, whether he can rely on them or not, whether they will be responsible for their audit report or the auditor will be responsible for his overall audit report. So it needs to be kept in mind that ultimately it is the auditor who is giving an audit opinion, remain responsible. He must check the independence, quality, competence of that expert. But finally, at the end of the day, it is the auditor who will be responsible for the opinion that he expressed. And friends, today we have a very learned faculty, Padma Shri Presto, to take us through the nuances of these two topics using the work of another auditor and an auditor's expert. And I have the great pleasure in introducing, I'll say, my younger brother in the council, younger in terms of experience in the council. But otherwise, yes, Yan Bhai has experience which is more than me. Yan Bhai has joined this 25th council and he's been a real asset to the council. I can tell you that based on the preparation that we have in council, he's one of the finest council member I've ever come across. Yan Bhai is a vice chairman of the CP committee, is a fellow member of ICI, an associate member of Institute of Company Secretaries of India, a law graduate, as well as an insolvency professional. He's serving ICI in various capacities since 2010. And besides being a vice chairman of CPE, which is under the aegis of which this program is also held. And friends, let me just give you an idea about the magnitude of the work that CPE handles. Last year, we have done 8,200 programs, CPE programs. So think of the magnitude that on an average, more than 25 programs were held on an average every day. He's also the vice chairman of Internal Audit Standard Board. And this year, again, we are coming up with a very large number of internal audit standards. He's also a vice chairman of the Committee on Management Accounting, and he's a member of Examination Committee. The dedication with which he works is really an example for all of us to follow. Yan Bhai possesses about 24-year proven professional track record and has been instrumental in contributing towards the social welfare as well. He's actively engaged in the MSME Yatra also. Recently, the MSME Yatra reached the Ghaziabad area. And Yan Bhai has served as speaker and resource person at various forums and delivered lectures on various, and he has attended meetings on behalf of ICI, both nationally as well as internationally. We welcome you, Yan Bhai, and would request for your keynote address. Thank you and over to you.
So thank you, very respected council member, my brother C.A. Sanjeev Singhal ji, who is handling two very important portfolio of the institute, the Auditing and Assurance Standards Board and Sustainability Board, which is of course of utmost importance as of now, not only in India, but across the globe. So friends, let me tell one thing up regarding Sanjeev Bhai. I have seen such a dedicated person that nowadays when I think about sustainability, the only name which comes in mind wherever it is being discussed regarding the sustainability, the one name that comes in the mind is Sanjeev. So his dedication towards the profession, towards both the boards, is really a matter of pride for all of us. And Sanjeev Bhai, we people feel pride when we are in the public and we say that we are the ICI and who have represented the global forum in such a way with regard to the sustainability that nowadays the ICI has become the brand ambassador not only in the country but across the globe as far as sustainability is concerned, and all praise to goes to Sanjeev Bhai. So kudos to you, sir, for your such dedicated effort to take the sustainability board to the next level, not in India but across the globe. With regard to the accounting and assurance board, in last 7 months, I have witnessed the way the board is working day and night and effectively in such areas which are of dire need for the members, especially the SMPs. So your complete dedication I have seen for the SMPs. That is again a matter of pride for all of us. That with regard to the each and every topic, you keep on discussing, and the members who are very close to the board, they always take the benefit of the various knowledge sharing sessions of the board. So today's topic is very important, as well said by Sanjeev Bhai, that using the work of another auditor and auditors experts, that is very important because nowadays the chartered accountants are not the persons who can handle all the areas of the audit. May it be related to the other field, may it be related to the legal field, architectural field, uh, you can say engineering field, or it might be related to the field of other auditors who have contributed in conducting the audit. So how much to rely on the report, what type of reports we can take, and how to incorporate those reports in preparing our own audit report. That is the essence of the entire discussion. I'm sure that this discussion is going to benefit the members at large. And I'm again emphasizing on the thing that the time has gone that we will skip any kind of irregularity. The responsibility again rests on the shoulders of the auditors, because if we see even after 2 days only NOCLAR has been implemented and it is now applicable. So it is need of hour that we auditors are awake and we know the ambit and areas where we have to focus while designing and drafting the report so that it could be well delivered to the various stakeholders at large in interpretation of the report. So Sanjeev Bhai, I am thankful to you for giving this opportunity to interact with the members. I'm sure that both the boards will take newer and newer heights under your leadership in coming time. So thank you very much, Sanjeev Bhai, and of course, Padma Shri Cresto Madam, who is wonderfully speaker on the topic. And over to you, Sanjeev Bhai.
Thank you so much, Kyan Bhai, for your kind words and advice. Thank you so much. And with this, now I request our learned speaker, Padma Shri Cresto, for the technical deliberation of the topic.
Thank you so much, sir. Thanks for providing the opportunity to discuss the matter in detail. Hello, am I audible?
Yes, madam, you are well audible. Please continue.
Yeah. Give me a minute to just present my screen. Sir, can you please confirm that the screen is visible and I'm audible?
Yes, screen is well visible and you are well audible, madam. Please continue.
Yeah. Thank you so much. Thanks to the Auditing Standards Board for providing the opportunity to speak on a very relevant and necessary topic. Before we start on to the understanding of this, I would touch upon few of the topics that are relevant and I can say kind of there are some myths that are developed over a period of time. which I would like to, what do you say? It may be a myth breaker, or we can say that over a period of time we have traveled, as both Mr. Gyan Chandraji and Sanjeev sir told. Number one, there are, in the standards of auditing, you can place certain reliance on work done by someone else. However, the ultimate responsibility lies with you if you are signing the report. Auditing standards does give us leeway to write certain things in the report, but even to write those things in the report, we should have done some amount of work. Without doing that amount of work, if we are writing in our report that this is we have relied on so and so, that will never be the right thing to write, because we have not seen those things. Another thing that generally flows towards is, if I get the financials from the another auditor, or if I'm getting something from someone, I can close my eyes and rely upon. No, time and again, I think the regulators have shooken people from their ignorance, from the sleep, or from their, the very core of it, to say that no, this is not something that's true. You have to do your duty, and then you can rely for certain procedures that they have done. You can't say at any point in time that blindly, oh, good, I'm relying upon these things. So that's never the case at all. I think that is very necessary and essential to understand that this is how the standards of auditing work. But it thrusts upon certain responsibilities on us as auditors, and then it actually further talks about what are the other procedures to be done, and then ultimately what is to be written in the report. I've also drawn a small slide on SA 600 vis-a-vis ISA 600 to just make the differentiating factor between what is there in international standards of auditing and what is there in SA 600. The third thing that I would like to touch upon here is that most of us deal with auditors in other geographies, in other jurisdictions. So what happens is, because of these differences that exist, we start believing what is right in other jurisdictions is right in our jurisdiction as well, which is not the case. There is a slight difference over there, and there are certain nuances that are present there, as well as certain differences in terms of the way we put up the report also exist. So with that, I would like to start off with the core topic, that is the SA 600 as well as 620, using the work of another auditor and an auditor's expert. So two different standards. I'm switching off my video for better, audio bandwidth and visible capability of the screen. Yeah. To understand SA 600, so we are first talking about SA 600. So to understand SA 600, we need to understand few terminologies which are very, very important. What are these terminologies? Number one is the principal auditor. Who is the principal auditor? Okay, so who is the principal auditor? So this is the definition as per the standard. Okay, as per the standard itself, 600. 600 is again revised. We'll come to 600, ISA 600 a little later. Why I'm stressing upon ISA 600 is there is differences that we inculcate over a period of time. We start thinking that what they have done, what people do in other jurisdictions is the same things that we are also doing. And we start believing that those things are appropriate and right, which is not correct. Okay, what is principal auditor? Who is principal auditor? Principal auditor means auditor with responsibility for reporting on the financial information of an entity when that financial information includes financial information of one or more components audited by another auditor. Now, this is like a definition. Let us break that down and understand. We all know this well, but then just for the sake of clarity, because these terminologies we will be using time and again, so I'm just touching upon and dwelling upon these things for a couple of minutes. Who is the principal auditor? Say there is an entity A, which is the holding company also, and which is the parent, which is also called as the parent company. It has, say, components. What are components? Components are not necessarily subsidiaries. Components are subsidiaries, associate, joint venture, everything that is getting consolidated into a parent. So parent A can have multiple subsidiaries. We know that few of the entities do have 40, 50, 80 subsidiaries, and few have more than 300 also. So what is important? Understand that you are the principal auditor and there is a component auditor. Now there are things that are intertwined. Which are the things that will be intertwined? Number one, section 129 of the Companies Act, which says from the time that Companies Act 2013 has come into picture, it says that even if you are unlisted, if you are a private limited company, you're supposed to prepare financial statements, consolidated financial statements, and you are supposed to audit it, and you are supposed to submit as the way you do it for standalone. That's Companies Act, which is law of the land for us. That's point number one. Second thing to understand is when you are having an intermediate consolidation. So there is entity A, which has 5 components or 10 components, 3 subsidiaries, out of which 3 are subsidiaries, 2 are associates, and other joint ventures, so on and so forth. Now, if there are sub-subsidiaries of entity B, which is a subsidiary of A, then intermediate subsidiary can be exempt from consolidation because ultimately it is getting consolidated into A. That's the next thing. However, for entity A, B will still remain a component and sub-subsidiary of B is also a component. So that's very important to understand. It will be a component of B, but it will be a component of A as well because that's a sub-subsidiary. That's very important to understand. Next, guidance note on consolidation. Please remember this and do not forget this, that the guidance note on consolidation still exists. It is not withdrawn. There are certain principles, there are certain guidances that are available on guidance note on principle on consolidation, which are actually relevant and which are actually much more useful even in everyday consolidation. Okay, so the next important thing. So one is 129, second is guidance note on consolidation. The next important thing is your applicable Ind AS or AS as the case may be. For example, 21, 23, 27 of accounting standard corresponding Ind AS. Okay, for consolidation. Principles of consolidation as per GAAP. GAAP is IFRS or Ind AS or accounting standard or as the case may be. Principles of consolidation will have to be understood when we are talking about group audit. So the terminology that we will be using more and more will be group audit. What is group audit? Group is A plus their components all put together. Next important thing is other auditor. Who is the other auditor? Other auditor means auditor other than the principal auditor with responsibility to report on the financial statements or financial information of a component. Okay. Now, who is the other auditor? So basically, he must be the auditor of, he will be the auditor of any of the components. He may be an auditor of associate, JV, he may be an auditor of subsidiary, he may be an auditor of sub-subsidiary. Everyone else for us is other auditor. So I am auditor of the principal or the holding company. Everyone else is other auditor for me. So that's the basic understanding. Next, component. Component means anything can be a component as we discussed. It can be a division, it can be a branch, it can be a subsidiary, it can be a JV, associated enterprise, or any other entity whose financial information is getting consolidated into the main auditor's report. I don't know, some text is missing over here, I'm sorry. So that's the component for per se for a entity as a whole. So having understood this, let us proceed to the next step. What happens when a principal auditor is or has to conduct the audit of a group and he has to go further into the audit of the other financial statements? So let's take up a case for the purposes of discussion. This example we will keep repeating. There is entity A, out of which say there are for the purpose of simplicity, I am taking subsidiaries only. There are 4 subsidiaries. One is being done by B, C, D, E. So one of these subsidiaries are audited by us, who is the auditor of the parent entity. Second subsidiary C is audited by another auditor. Okay, and D is audited by one more auditor, and E is not audited. Okay, it's not audited. We'll come to that why we are taking this example, because this will be useful to understand the intricacies that are actually present in case of group audit. What are the matters to be considered by principal audit? So option number 1 of principal auditor is I audit everything. I am the auditor of the holding company. It has 5 components. I am going to audit everything. Okay, that's the best way. I audit everything, I consolidate everything, and there is no issue. So I know how my methodology works. What is my methodology? Every firm has its own methodology. Some firms actually decide materiality on a little bit different benchmarks. Some other firm has some other benchmarks and things like that. But everyone has their own methodology, and they can use their methodology. So if I am the auditor of all the 5 components, where is the problem? I don't have any problem, so I can easily go ahead and consolidate, right? But the world is not so simplistic. Yeah, so we always have complications. 2 of the entities are not in India. So one of the entity never requires audit, because in that jurisdiction, audit is not a mandatory thing at all. So compliance cost is saved. Company doesn't want to get the audit done. So that's management audited. Another country, there is no requirement of audit. However, the company feels that it has to get audit for some bank loan or something, then it is getting it audited. In another country, there is audit is compulsory like India, so they are getting it audited. So the world is different, and we have different components, and we have different auditors. So if we have different auditors, what is it that we have to consider? So when we are the principal auditor, he has to consider his participation to act as principal auditor. What is participation? This is where the difference in SA 600 and ISA 600 starts. So in group audit, in case of ISA 600, the parent auditor, the parent auditor, that is the parent company auditor, is the one who is responsible for the group as a whole. That means whatever is done, wherever in any of the component, he is the one who is going to be responsible for the entire audit. Now, entire standard SA 600 is also very similar and strikingly same as ISA 600, except for one leniency that SA 600 gives you, is that if there is another component auditor, then you can report in your report that it is audited by someone else. However, that cannot be by closing my eyes, but by doing certain procedures. So we will look at what are the procedures that we have to do. So first principle is the parent auditor has to determine that his participation in the component audit is sufficient as a principal auditor, not as a component auditor. Okay, so component auditor will anyways do the audit of the component. However, the principal auditor has to have his satisfaction as to the participation is sufficient in the components as the principal auditor. That's very important. What are the factors that we will have to consider here so that I consider my participation enough to give a group audit opinion or the consolidated audit opinion or as a principal auditor? What are the things that will I have to consider? Okay, so number 1, materiality of the portion of financial information which the principal auditor audits. What does this mean? Now we have taken that example of 1 plus 5 components. So I have given that example that 1 we do, 2 others do, and then so 1 plus 4 components, basically 1 I do, 1 other than parent, 2 of them are done by 2 other people, and 1 is not audited. Now, if we come to listed company, we have SEBI regulation which says that 80% of the group has to be reviewed or audited, as the case may be. That doesn't say that it has to be audited or reviewed by me. So it says that 80% of the consolidated figures have to be audited or reviewed. That is the SEBI rule anyways. However, when we come to the auditing standard, first thing that says that materiality of the portion of the financial information which the principal auditors. So in our example, that's 1 plus 4. Let's take that the parent company is the large one. It is actually doing all the business. Okay. And all other 4 companies are actually chotu-motu subsidiaries or a smaller minor subsidiaries which are carrying out their activities and it gets consolidated. So say the principal auditor or the parent company is having business of say 80-85% and all other things put together are 15 to 20%. Do we have a problem? No, we don't have a problem because majority is being covered by us. Okay. Second example, parent auditor audits parent company has say in terms of turnover, asset size and things like that is 50% of consolidation. Okay, consolidated asset, liability, income, expenditure. Say that's the parent company. Then another company that we audit is say a major subsidiary, which again considers something like something like 15 to 20% of that, which is getting audited. So what is the portion that I am covering in terms of information? Me plus one more subsidiary, which is actually 65 to 70%. Whether it is a problem? No, it's not a problem at all. Now, this is not written as a problem, but these are the things out of professional judgment that I have to consider. The next example, parent auditor is only an investment company. Okay. So there is huge business sitting in one subsidiary, which we are doing auditor. So parent company plus the subsidiary still comes to 65 to 70%. Is there a problem? There's no problem. Fine. Next example, parent company is a only investment company. It's only sitting on the shares that it is holding. One subsidiary that we audit is only 30 to 35% of the consolidated asset along with parent. If we look at the asset, liability, income, expenditure portion, say it comes to 40-45%, and the entire 55% is audited by someone else. That is, 2 of the components have these businesses of 30%, say 20%, and the unaudited is 5% or something like that. So entire thing is done by someone else. Here is the question that gets arisen as to whether in this case, am I comfortable to issue a consolidated financial statements? So if you look at the practicality, standard allows you to do this after doing some work. However, many firms do not prefer to do this. If we are not covering, say, for example, 65 to 70%, generally the firms will not be comfortable to issue the consolidated financial statement report. Why is it so? Because there are risks involved, there are complexities involved, there are many number of issues involved herein, and it becomes very difficult for anyone to ensure that everything is going on smoothly in all the components. This is what this means. Now, if we take another example, in the same stretch of scenario, say what the one subsidiary plus the parent that is audited comes to 35-40%, 2 other subsidiaries comes to 30%. 30% is something that is still left out as unaudited. Are we happy with writing that in the financials? Is something that is questionable. Next thing, if I am auditing the parent company, say in India, it's a statutory audit. So I have to do standalone statutory audit of the company. And if the subsidiary B is also in India, then it is also being audited under Companies Act and I have to issue a report. So I am doing audit of A, I am doing audit of B, I am ensuring adequate coverage and I am issuing a report. Now, next example, let us take if entity A is in India and if entity B is outside India, which does not require an audit, but I have to consolidate, so I will audit. So question number 1, whether it is necessary for me to issue a report on those audited financial information or is it not necessary? Okay, here is the difference of ISA 600 and SC 600 that comes into play again. ISA 600 doesn't require any separate report to be issued to the parent. If it is audited by me, I can consider it is audited by me and I can include it in my report. There's nothing that is I'm specifically going to put out as unaudited as such. However, in SA, there is no clear demarcation of this. Okay. Both schools of thought exist. Few people think that if I am auditing, I don't have to issue report to myself. So I am good to go with report of parent A and no report of parent B, but I have audited parent B. I have all the working papers and I have audited parent B. So I don't have to issue a separate report to myself. So I'm good to go. However, there is another school of thought that exists. In India, you cannot say that you have audited unless you issue a report. So accordingly, if you are doing the SA 600 consolidation, then it is necessary that you issue a report to yourself. That is, your firm issues a report to the board of directors for the purpose of consolidation, and then you take it up. So difference in reporting also, let me touch upon for a couple of minutes, that if it is a statutory audit, obviously you're going to issue a normal SA 700 report. However, if it is only for the purposes of consolidation, then you are issuing a report for the purpose of consolidation, which is report under SA 800, which is special purpose report with a restriction on use, that this is supposed to be issued only for used only for the purpose of consolidation and nothing else. So I think the materiality of the portion of financial information which the principal auditor audits can have multiple scenarios. Please open up your mind and think about it. And there are innumerable possibilities and innumerable number of cases that come to your attention. One very typical question that you will have to evaluate and you will have to answer is that whether substantial portion is being audited by me to be comfortable to issue the consolidated audit report. Now, please understand, I'm not saying that it is right or wrong, but generally it is a practice. If I'm not auditing majority of the portion, then I may not be knowing what is happening in those companies, because those are very, very material components or subsidiaries. The next point that one has to consider is degree of knowledge regarding the business of the components. Now, different companies have different components, and different components are formed for the different purposes. So if, say, you are the parent auditor, that is, you are the auditor of entity A, which is the parent company, which is into manufacturing business. You are not an expert into banking, insurance, or some say cryptocurrency. In India, it is still not legalized, but then in some of the jurisdictions, there are crypto exchanges, there are crypto trading platforms and things like that. This can be your subsidiary. Now, how much knowledge of the business of components do you have? Because ultimately you are going to do a risk-based audit as per SA 315. So you need to know the risk of yourself as well as the components. And how well prepared are you and how well updated are you on the components business. So if you lack the competency, then it may go back to SQC1 as to how did you take this audit. Say if the cryptocurrency or the banking business is one of the largest piece in your entire consolidation, and if you are not having any knowledge of banking or insurance or crypto as such, then one may always question that how did you take up this audit, because you do not have adequate capability and competency to do the consolidation also. Because it's not about only auditing the principal, the parent company, but then it's also about the knowledge of the component auditor. So you will have to evaluate and think about the knowledge of the business of the components as well. The next important thing, risk of material misstatement in the financial information of components audited by another auditor. You are the parent auditor. So you will be, one of the things that you will be doing is that to get a comfort, we all do that. We have set of group audit instructions that we send out to our components, right? Now, what is group audit instruction? Basically, all these four components say are in different jurisdictions. Say component B is in India, component C is in India, which is audited by another auditor. B is audited by me, so I don't need a group audit instruction to myself. But component C is audited by another auditor. Here is the twist: you send a group audit instruction. Group audit instruction basically has what? Has different components like confirmation on independence, the timetable, who is going to sign it, the contact information, risk of material misstatement, understanding of the business, materiality, any adjusted, unadjusted misstatements that you have to send, any of the specific areas that you want to look into in detail, any of the issues of fraud or highlights that you want to report to the group auditor. So this is what is group audit instruction. Now, one of the typical things that happens is when we send group audit instruction to India subsidiaries, the standard reply that generally we end up getting is, we are also auditing as per statutory regulations under Companies Act. So I don't need to give you a group audit instruction. I'm giving you a financial statements. Please take it and move ahead. This is one of the common things that actually exist. However, this is not right, because if to prove that I have been involved or participating, the first line that says that participation is sufficient in the component to act as a principal auditor, I need to show my participation, and if to demonstrate my participation, I need to send out those group audit instructions, and someone has to fill in those and send it back to me. It's not that you are giving a financial statements and the duty is over. Me as a component auditor should respect the position of the parent entity, and then I'm supposed to fill up the group audit instructions and provide it back to the parent entity and report any matters that happen. Right. So when we make this group audit instruction, the common thing that we have to identify is risk of material misstatement for the entity as a whole or for the group as a whole, and also in each of the individual components. That is when the business of the components or the understanding of the business of the components come into picture, and that is when this understand then inculcates or identifies helps us to identify the risk of material misstatements of the components as well. So we have to identify for the group, we have to identify for the component, and then if anything additional is to be added by the component, we have to give a space for that, and then understand what are the risks, and if whether those risks from the components translate into risk for the group is something that we will have to see. In the example that we took of the banking company or the crypto company, that is a major component of the entire financial statements of the group as a whole, then obviously the risks that are sitting in that business may actually converge into risks of the holding company or of the entire business of the group. Then performance of additional procedures as set out in SA regarding components audited by other auditors, resulting in principal auditor having significant participation in such audit. Here is another problem. So performance of additional procedures. What do you mean by that? Okay, so say for example, in our example, C is another entity which is audited by component auditor in our jurisdiction, which is in India only. So we tell him that, okay, there are significant capitalizations in your company. So please look at CWIP very carefully and report back to me on certain parameters, 1, 2, 3, 4, 5 audit procedures. Now, if he has observations in that, then we can ask him to perform additional procedures. If he is not able to, then we can perform additional procedures. This is possible, and that is what will actually show the additional procedures and things like that, which will be, which will be our participation. So there has to be a continuous interaction. One of the things that always is seen is that the parent company auditor has to send everything, but many of the time the component auditor never replies back to the parent auditor, and then it all goes as a waste of time. That should not be the thing. The way, in Code of Ethics, it is said that you have to send NOC. It's a professional obligation on the person receiving the request also to respond back and to say that, yes, this NOC is to be provided to me so that he can go ahead and do audit. If I have an objection, I can put it out, but sitting quiet is never an answer. So as a component auditor, it is my duty to actually go out and tell the parent auditor if there is any issue per se, or if there is nothing, then at least adhere to the group audit instructions and ensure that I give it back properly filled in. What are the procedures that are to be followed by the principal auditor? We spoke about many of these things. Advise the other auditor of the use that is made of his work and report. Actually, in the group audit instruction, these are the things that we just write down. Where is your work being used? It's being used for the purpose of consolidation, for the purpose of preparing the group level audit report. Financial statements is something that we are going to put it out there. Inform the other auditor of the matters such as area areas requiring special attention. We talked about PPE, it may be impairment, it may be going concern. You can identify any area specifically if you see that if you perceive that there is a risk in the component auditor. What is the time that is required for completion of audit and procedures for identification of inter-component or transactions that may require disclosure? Timing is very important. Now, if I have a board meeting of the group taken as a whole or of the parent company or to adopt the consolidated financial statements, and if the board meeting is going to happen on a certain day, obviously we need all the subsidiaries to close before that. We cannot have a scenario wherein subsidiary is closing later. Now we can look at a typical scenario wherein many of the countries across the globe has December year-end closing. So what do you do in this case? For March, how do you do it? So you send the group audit instruction, you ask them to provide an opinion, and then you consolidate that, because that will become a special purpose reporting again in the given case. So generally that is how it is done. Or if it is a smaller component, then there are financial statements that are prepared by the management, and you end up adopting along with that, if that is immaterial. Make sufficient arrangements for coordination of efforts at the planning stage of the audit. Planning is very important. As we know, we all say that as per standards of auditing also, and as per regulators' observations, something like NFRA or QRB or whatever. So we all know that there has to be a significant amount that has to be spent in planning. So if they need any help in planning, we should be available as parent auditor, and we should be continuously coordinating with them to get any of the issues sorted. Discuss with the other auditor the procedures that they have applied for various areas. It can be significant accounting, auditing, reporting requirement, obtaining representation, whatever as the case may be. So all these things are necessary to be communicated to them. Communication is very, very important. If you do not communicate well, the results may be different. So we need to communicate well so that everyone understands it in essence and ensures that compliance is done. Consider the significant audit findings of the other auditor. We will come to that a little bit later. When consolidating, we have to consider these, and then only we should be able to close it. These are written in one sentences, but then these things have very huge implications. These culminates into a lot of working papers, lot of discussions, lot of communications. All those things put together is only a group audit if it is a complicated and a large group audit. Discuss with the other auditor and management of the component of the audit findings or other matters affecting the financial statements of the components. So obviously, you should have a two-way communication. You should continuously keep interacting with the component auditors about the matters or the findings that affect the financial statements of the components, and also any of the findings that they have in this scenario. In case if the parent auditor principal auditor considers necessary, they can ask the component auditor to perform supplementary tests. That is what we discussed, like if they want, in our case, with the example that we took of CVIP, if there are additional procedures that they want, that we want the component auditors to do, we should be able to communicate that. We talked about all the AS Ind AS applicability, Ind AS 110, 111, as well as 112, and AS 21, 23, 27. So that's the framework that we talked about further. Okay. If the auditor is of the view that his own participation is not enough and he should consider the work of other auditor, we talked about the principles over here. We talked about various things in terms of how the audit has to progress. Okay. One of the important things that in terms of ISA 3, in terms of SA 315 or the risk identification that we spoke about is about the business risk. Also, there can be IT risk or the ITGC. In few of the companies, the entire system is set up at the parent company or at the global hub or something like that. Say it's a cloud setup which is sitting in India, and then there are 10 components, and everywhere that is a system that is running. So the ITGC risk that has to be considered has to be at the group level, and ITGC has to be done at the group level. And there are again two things that are to be considered. Is it necessary that every component sample has to be covered there, or is it not necessary? Now that's a question of debate. It is so few people argue that it is not necessary because systems are working the same. It's not necessary to cover everyone's sample. However, few of the firms make it mandatory that everyone's sample has to be covered, so that the ITGC at large are looked into from that angle. Another example is different firms have different components have different IT systems. Then ITGC itself becomes a risk and it has to be evaluated. So it has to be locally tested and it has to be part of the group audit instructions or part of your overall testing. Another complication is now for India, we have IFC testing. If we are consolidating and if we are the parent auditors of an Indian conglomerate, then what happens is many of the countries do not have IFC, right? For other countries, we don't have to report on IFC. However, we need to understand whether control-based approach is used or not used. At least that much is necessary because we are writing it in the report. So we are not opining on the IFC, but then for our purposes, we need to understand whether others are doing a control-based approach or not control-based approach, or if there is any major observation or failure in terms of controls. So that is something that becomes very necessary to understand. Then intercompany transactions. Intercompany transactions are something that's very essential whenever we are talking about the group audit. Intercompany transactions, what is the type of intercompany transactions? Who are the related parties? What is it that actually gets from what are the procedures that happen, and what are the reports that get out of the systems? All these things have to be understood properly, and then intercompany balances and knocking off intercompany balances becomes an essential part. Next, for us as a parent auditor, determining the nature, timing, and extent of audit procedures to be performed based on assessment of risk of material misstatement, as we discussed, becomes very, very important because our entire audit is on the basis of, risk identification. Coordination, very, very important. So we talked about 50% or not 50%, which is the general rule that is applied by many of the firms. We talked about SEBI LODR regulation 33, wherein 80% needs to be reviewed or audited, not necessarily by us, but anyone else. However, if substantial portion is not being covered by us, it's food for thought that whether we want to issue the opinion where substantial things have not been done by us. What are the factors that affect group audit engagements team decision to use an expert audit required by statute? Differences in financial reporting framework. Yeah, this is a very important thing. Say in our example, we had 4 subsidiaries. Out of the 4 subsidiaries, say subsidiary C, which is a significant component, is actually outside India. It is on, say, Singapore GAAP or IFRS or something. Then the GAAP conversions will have to get audited, or we have to do the GAAP conversion. That means they have to do, in the sense we don't have to do the GAAP conversion, that is to be done by the management, and we audit the GAAP conversions, and then we incorporate it into the financial statements, and that fact has to very clearly come out into the audit report. This usage of GAAP, usage of gas has to be specified in the group audit instruction. It has to be actually very clearly spelled out so that they understand the requirements. We can send out a financial statement format also to them, audit report format also to them, for them to opine on. Obviously, the consolidated audit report for other countries will not have the legal and regulatory para of 143.3 because that's not applicable to them. However, in the consolidated, we have to, provide that section. Differences in auditing and other standards applied by the component auditor. So it happens the reverse way. If they are applying ISA 600 and if we are applying SA 600, for us, everything that they do will be essential. And from ISA 600, they can directly do the work if we are the components. So please understand that this difference. If we are using SA 600 for consolidation, we will have to look into their work. Similar is the case of ISA 600 also. However, as per Indian practices, we directly don't get into their work and start doing their work, which is possible in case of SA 600, ISA 600. Whether audit of financial statements of component is expected to be complete in time as per the group timetable. We spoke about timetable, which is very, very necessary and essential. Materiality applied for the audit of components financial statement is appropriate for group audit purpose. So say materiality, if I decide on the basis of benchmark, which is if I take the benchmark as revenue, okay, it is relevant for say the group as a whole. However, there may be one entity within the group for whom revenue is not the appropriate benchmark. Say it is a mutual fund or a investment fund, a PE investor or something who is a subsidiary. Just I'm taking a example. For them, the asset under management will be the right benchmark. So then the component auditor has to communicate and say that whether this is appropriate to you or not appropriate to you, and if need be, discussion has to happen so that both of them agree. Because if the group says you have to take on revenue and if the subsidiary takes something else, that is not going to be easy. In terms of materiality, another thing is that one is benchmark, second is percentage, third thing is material items within the financial statements, all material items. So if I decide, say, for a component which is C, where if we decide that, okay, 25 lakhs is the materiality. So overall materiality, and performance materiality is say 20 lakhs. Okay, so all items above 25 has to be checked properly, because everything in the subsidiary above 25 becomes material to me as group as a whole. Just taking a very simple example, there can be further complications here as well. So materiality is another consideration which is very, very important. We talked about differences about ISO 600 and SA 600 every now and then in between, wherever there are intricate differences. Now, important thing that we come to in terms of identification of significant components. In our example, we have one parent plus 4 components. What is significant? Significance of a component can be based on nature, complexity, and percentage. Generally, first is the percentage of turnover, asset, liability is something that is seen of the group as a whole, consolidated as a whole. So if anything, now it is not a thumb rule. However, every firm takes it as in the range of 15 to 20% if the if the income, expense, asset, liability of the component is in the range of 15 to 20% of the consolidated financial statement, then that component becomes material component or a significant component as such. I'm not talking about material subsidiary in terms of SEBI regulation. That's different. This is for the purposes of audit. We are determining significant component. Now, one of the way of determining a significant component may be based on the nature of business or the complexity. So we took an example that one of the component is say bank or a crypto. Then, and if it is a complex business, then that may become material on the basis of qualitative aspect instead of quantitative aspect. Okay. If a subsidiary is having significant intercompany transaction and everyone is trying to do intercompany transaction with them, then that becomes a significant component by its nature itself. If any component actually has some complex business model or some using some aggressive stance, then that may become a significant component. If at all in a component there are frauds that has happened in the past, then that may become a significant component. So 20%, 15%, 20% is just a benchmark to determine whether it is significant to you or not. However, that's not the thumb rule, and it depends on case-to-case basis as to the nature, complexity, and the type of business and things like that. So in determining the significant components, so when we start our group audit, the first thing that we chart out is take the list of components, identify what all are the significant components. And once we identify the significant components, next step is we set up significant component on the basis of amount or on the basis of qualitative factors. We identify the significant component and then we identify the non-significant component. When we have the significant components, then we set materiality for them. Then we send out group audit instructions for them, and then we review the work also. For non-significant components, what we do is perform few analytical procedures, make a quick inquiry in a shorter form, not like a detailed group audit evidence, group audit instruction, a shorter form which will cover independence, any high risks, any highlights, anything that you want to bring it to our notice, kind of an inquiry. And then we do our analytical procedures, take the financials from them, obtain the financials from them, and then go ahead with our assessment and then do the consolidation audit complete as such. That's how we go about the audit of the components. Okay, so evaluation of this significant component is very, very important. There is no fixed methodology as to what is it. If it is 2%, it becomes significant. If it is not 2%, it becomes significant. One of the very important point to note is that it is possible that an entity is non-significant component. However, it may have certain items that are material to the group as a whole, which has to be tested. If you look at that as a whole, that component may be very small. However, there may be one transaction during the year which is material, which makes you to look into that component with care and caution. So even if it is a non-significant component, you will have to look at it very much in detail as to is there any item that actually affects the overall materiality or overall group. So that inquiry or that care and caution has to be taken by the parent and auditor at all points in time. So these are the few methods of wherein 600 para 26 talks about ISA 600 and para 28. So para 600 of ISA 26, para 26 of ISA 600 says that what is significant is required when component is of individual financial significance. And para 28 says when component is of neither individual financial significance nor there exists any significant risk. So combining both of them, if there is risk, if there is nature, if there is circumstance that makes us identify a component as a significant component, we have to identify them as one. So basically, audit of one or more account balances, classes of transaction, disclosure relating to significant risk is something that can make it a significant component. So it's very important step, determining a significant component, documenting a significant component is very, very essential because your whole audit methodology of the consolidated audit depends upon this thing. So we spoke about applying a percentage, 15% generally taken, higher, lower, 20% significant influence and things like that. So these are normal parameters that actually exist to determine a significant component. You may choose your own or you may actually add or look at it from a larger angle. Next important thing is group and component materiality. What is group materiality? What is component materiality? There are different materialities that will have to be set. One for the holding company or the parent company when they are doing the when we are doing the standalone audit of the holding company or the parent company, that is the parent company's materiality. Then determining the group materiality, group as a whole. That is on the basis of consolidated financial statements. Then determining the component audit materiality. So based on the significant component and based on the percentage and based on their turnover or their benchmark, then determining the component audit materiality. And also specific materiality if it is necessary. So for certain line item, you may have a specific materiality where you want more verification to be done. Okay, so let's take an example to understand. So our component A, say we determine the materiality on the basis of profit, and then we set the materiality on the basis of profit and then the percentage benchmark of say 0.5 to 2% or something. We determine amount, say 100 as the standalone parent company materiality. Now that is the materiality for the purpose of audit of parent company standalone. Then when we come to consolidated financial statements, say we determine on the basis of 150 is the group materiality on the basis of profit as a benchmark again. Now component materiality is actually 150 further drilled down on the basis of components or determined on the basis of components, whatever is the benchmark. Generally, the benchmark that is taken by the group is the benchmark for the components. However, it may vary, as we took an example of bank or something else being a component. So that's carefully decided. Now, what is it that we mean by this entire structure? When we determine a materiality for the component, that means me as parent auditor or the principal auditor, I can only tolerate error up to this level in your component or in your financial statement. Anything above this, I will not tolerate it as an error, because that will then be considered as misstatement. Okay, anything above this will not be considered as misstatement. So that's very important for us to understand. And that is why, while communicating and by calculating component materiality, it is very necessary. Another thing, 150 is group materiality that we took. Now, there may be cases that, all the 4 components put together, their materiality may exceed 150. However, individually, their cap is their materiality. Say for component B, we have determined a materiality of 70. For C, we have determined a materiality of 60, and so far. So everything put together can go above 150, but individually they have to remain in their limit. And overall, they cannot go, overall, all components put together, when we are assessing at a group level, it cannot go above 150. That is the funda of group and the component materiality. It's quite complicated, and we will have to sit and actually evaluate, and then we will have to demarcate, and then we will have to identify the component materiality, because this is the next important step. As we said, first important step when doing a group audit is list down the subsidiaries, components, whatever kind of components that you have. List down the, identify the significant components. Next step is to determine materiality. If you go wrong in these 3 steps, actually, your consolidated audit or the group audit may have an implication which is heavier than you normally think. Yeah. So this we spoke about, I think, very much in detail. Component materiality is decided on the basis of the structure of the group, significant RMM, evaluation of group-wide control, expected level of misstatement, and then if materiality for statutory audit is higher, the component auditor performs additional procedure in case the group audit. For example, if you have March closure and someone wants you to do a December closure, and if your stat audit materiality was higher, then you will have to, and the group audit materiality is lower, you will have to do additional work so that you comply with the group audit instructions. Now we come to the most important piece as to how you get involved into the work of the component auditor. One important thing to touch upon here before we start further is, in India, working papers are the asset or are the property of the auditor. So there is no legal obligation to share working papers to anyone, right? So if we are going by that funda, how will the group auditor look at the working papers that are actually made by us? Because as a group auditor, I need to look into working paper. Okay, so say for example, in our example, A and B. B, I am auditing, so I know my working paper, so there's no issue. Now, entity C, there is ABC as a firm who is doing audit of entity C. If I ask him the working paper, he says that in India, I'm not obligated to share working papers to you, so I will not give you. So how do I get it? So one, I can look at on the screen, I can visit his office and take extracts. I can ask him for extracts. I can, in addition to group audit instruction, obviously I'm saying, I can look at any of these methods to actually make notings and take extracts of the working paper, even though I don't have full share of the working paper. If it is the same firm, then it is easy because methodology, tool, everything that is used is simple. Another way of doing it is few firms have this FTP or something where they want us to upload certain documents so that they can access it and they can have a look at it. One important thing for us to understand when we are sending working papers to other countries is jurisdiction. Few of the jurisdictions across the globe has these powers that if your working paper lands up in their country and if that is part of audit of any other entity, then you can also be subject to review. That's one way of looking at it. Second, if there are irregularities that are found in that audit, then they can inform your regulator also about the irregularities. So we have to be careful. So when we are sharing such working papers, we have to expressly take a declaration from the other auditor that this is only for the purpose of consolidation. If at all you are getting it reviewed regularly or anywhere, I am not actually completely responsible. Now that has its backlashes, but then most of the time it works. So it is very necessary to understand this jurisdictional matter and legal matter. Otherwise, in some of the countries, if your working papers land up there, then you can also be questioned for any of the issues that happen there. So how do we get involved or participate in the work of the component auditor? Understanding of the component and its environment is very essential. Participating in opening, closing, periodic calls with the component auditor, have continuous communication, coordination, ensure that you are involved with the component audit, identifying, assessing risk of material misstatement at component level, internal controls that are operating at the component, reviewing the component auditor's overall strategy, audit plan. So timely communication is very important. Discussing about the susceptibility of the component for misstatement or fraud or anything. Then identified significant material misstatement memo, highlight memo, and all that, obtaining that from time to time from the component auditor. Related party transaction compliance with various laws and regulations. So there can be appendices or there can be what do you say, memos that can be received from the component auditors. And then also see, many of the times it so happens that the subsidiary audit closes first and then the consolidated audit closes later, the group audit closes later. So there will be a time lag between the both. So you will have to obtain subsequent event or the contingencies review between the closure of the subsidiary to the closure of the group audit. So that is another important thing. Now we come to the ultimate thing, reporting in the auditor's report. We are not talking about line by line consolidation of financial statements. Yes, we have to verify that. And there has to be a good working paper to demonstrate that. But the next important thing is line by line consolidation of the audit report itself. So one way of looking at it is if I am the auditor of 4 more components, it's easier for me to send my audit report format and get my audit report format in the same to same manner, plot it on an Excel sheet and identify any qualification, any EOM or anything that is coming out of a component and then considering it at the group level. One of the important things, how do I consider qualification at the component level, at the group level? Okay, so when we talk about group level, there are two schools of thoughts that exist again. One is reproduce anything that is coming in the component auditor as is. However, if you look at the overall structuring of the standard, you are the group auditor, you have to look at the implication of that specific item of qualification on the group report as a whole. And when you look at that, you can decide as to whether it requires a qualification or whether it doesn't require a qualification. Accordingly, you can take a call. Okay, that's how it happens. So plotting of that report line by line, and then looking at if you have all Indian subsidiaries, then you will have IFCs of everyone, you will have CAROs of everyone. And then if there are adverse remarks in CARO, you will have to bring in the consolidated CARO report. There are various different things that may happen. So you will have to be prepared for that, and then you will have to be evaluated. Please do make that complete note so that you don't miss out on any of the observation in anyone's report. You take it into due consideration, and one of the important pieces of documentation is how you have dealt with at the parent entity level. That is very important to be documented. If you look at the next thing, then the the observations that are there in the IFC report or in the CARO report, how do you bring it out and how do you consider for the main report? That is also very necessary, because if at all there is a disclaimer or there's a qualification in the IFC report, the impact of that will have to be considered on the IFC or the CARO report of the parent entity, but you will have to also consider the impact or things like that on the overall functioning of the company, that is under 143(3)(h), and also under the main audit report of the consolidated financial statements. After doing all your procedures, as we discussed, identification of significant component, reviewing their work, setting up materiality, looking at the issues, taking into account the highlight memorandums, taking into account the qualifications. After doing all this, then you are allowed to write under other matter as per SA 706. You will find this illustrative language in the guidance note on consolidation, where you can say that this was not audited by me. So when you are saying this component was not audited by me, you will have to give the total of the the turnover, the asset and the cash flow of that entity that you will give here. Now, whether you have to give it net or gross, it has to be gross before set off of any intercompany adjustments, and you will have to specify that in the other matter paragraph very clearly as to what is it that is not done by me. One of the important things that come up here at this stage is what happens if there is a component which is actually non-significant, but it is not audited by anyone. You have to make that also in the other matter paragraph, that it is only management accounts and it is not audited by anyone. Here is the professional judgment that comes into play. If that component is significant, then you can't say that it is significant, but no one has done audit of it, because then it is a significant portion of your consolidated audit report that you are leaving out in the open, that this is not audited by anyone, which is actually not appropriate. Okay. So while writing other matter paragraph, please make the chart and please ensure that you are doing it appropriately. Another important thing to touch upon here is SA 570. 570 is going concern, 560 subsequent event. Both of those things are very, very necessary when we are talking about audit report of the parent as a whole or of the group as a whole. Subsequent event of all the components, you have to have a reporting till that date. If anything goes wrong in any of the component post issue of the report of the component, but before issue of the group audit report, you are still responsible. So subsequent event assessment of all the components is very, very necessary. Second, when we are doing going concern assessment of the group, you are doing of the group at large. For example, in our example, we have 1 plus 4 components. In one of the components, if there is a going concern issue and if the parent entity, that is entity A, has committed to give support to that subsidiary, then when we are looking at going concern at parent level and at the group level, it will have to be seen at the group level as to how good is the group that is standing with respect to going concern. Are there indicators like losses, accumulated losses, operating cash flow issues, borrowing, current liability exceeding current asset? Any of these scenario exist at the group level. Though internally I may have given support to one of my components, but then when we are evaluating going concern, we have to evaluate it at the group as a whole. That's very necessary. Now, group audit will even, that is one of the important things in the group audit instruction as well. Any kinds of highlight issues, management points, any kinds of other matters, all those things of all the components, though they may have discussed at the component level, will have to be compiled and then will have to be issued with discussed with the management of the component of the group as a whole, and then it has to be concluded at that point in time. So that's how from start to end you will look at using the work of another auditor. Using the work of another auditor is not so easy, and it is not a closed eyes approach. You have to do all these things. You have to ensure that all these compliances are appropriately made so that you can write that para in the other matter paragraph. So it's very necessary, essential to understand. It doesn't relieve you of any responsibility. The responsibility is to ensure that the matters are appropriately considered, and then you are writing that para. By writing that para, you're not relieved of anything. Okay, I got audit report from someone, I have included it, I have not relied on it, matter over. No, it's not the right approach. We have to do all the procedures that we have spoken about and we discuss so much in detail, so that we conclude appropriately on the group audit as a whole. We move on to the next standard, which is 620, using the work of an auditor's expert. So, so basically, what is 620? Okay. So two things that are not covered or which is not dealt with is SA 220, in the sense, why does this SA exclude SA 220? Because we are not talking about quality control at other firms, entities, engagement and how they function. We are looking at our quality control, and also 500 audit evidence, because it is audit evidence for us. So who is an auditor's expert? Who is an auditor's expert? This essay actually tries to conclude that the work of the expert is adequate for the auditor's purpose. It doesn't in itself look at the audit opinion as a whole, but then this essay ensures that the auditor's expert's work is properly incorporated and it is concluded appropriately. Who is an auditor's expert? So I say I'm doing audit of an entity XYZ, and then there is an area where I don't have expertise. Simplest thing in today's world is by Ind AS coming into picture. There are so many things that one has to fair value. So not necessarily that I have all the expertise of how to arrive at value of shares, value of certain matters, value of various things. So I involve experts. One of the things that you largely see that is floating in the market, in the news, is that the auditor's experts' work is blindly relied upon. So what is it that makes us question the auditor's expert? First, we are saying that who is an auditor's expert? An individual or organization possessing expertise in a field other than accounting or auditing. So I cannot have an audit expert again. So this area I'm not able to do the audit. I'll call someone else and he will do the audit. No, that's not an auditor's expert. He has to be a person other than accounting and auditing. He may be expert in some other matter whose work in that field is used by auditor to assist the auditor in obtaining sufficient appropriate audit evidence. Whatever he does is sufficient appropriate audit evidence for me. So when we look at audit evidence as per SA 500, when you're talking about audit evidence, what are the things that audit evidence has to have? One is relevance, reliability, and then it has to actually it has to have the characteristic or the attributes of nature, timing, and extent of the audit procedure. So if that is fulfilled, then only it becomes my audit evidence. So basically, this standard talks about how to ensure that the information is relevant, reliable, and it becomes an audit evidence for us so that we can use it. Auditor's expert may be either an auditor's internal expert, who can be a partner or staff, including temporary staff of the auditor's firm or a network firm, or an auditor's external expert. For example, many of the firms have this, that audit is a specialization, then tax is another specialization, IDT is another specialization. Simplest thing, in our tax audit report, we have this GAR reporting. Not all of us are so experts in tax. For example, I may not be an expert in tax. So to look at that clause, I take help of someone else. So that is auditor's expert. So he is the expert for me in that case. So, so he becomes either he can be partner in my firm, or I can call him from outside, or from the network firm, or from outside. So whoever he is, I'm using his services as expert knowledge, then it is auditor's expert for me. What is the expertise? He has adequate skills, knowledge, and experience in a particular field. Who is a management expert? So management expert is an expert who is actually appointed by the management. There's always a confusion between management expert and auditor's expert. Please be clear. Auditor's expert is someone who is actually appointed by the auditor. and who actually auditor takes help of. If the person is appointed by the management, he can never become auditor's expert. Please remember that. For example, sometimes for some interpretation, etc., we ask company to get legal opinion because we are at loggerheads, and we don't actually there is difference of opinion that exists between us and the company. Then we ask for a legal opinion, say for utilization of securities premium or something. Now, that legal expert is appointed by the management, and he gives his opinion. He doesn't become an auditor's expert. He's a management expert. Actuarial valuation for the purpose of AS 15 or Ind AS, as the case may be, the actuary is not auditor's expert. He is a management expert. However, if there are differences of opinion and you go ahead and think that I need to get an independent actuarial valuation done, and if we appoint an actuarial, which is a rare case, but then he becomes auditor's expert, and then he is not a management expert. So that distinction will have to be always kept in mind. What is the application of this essay? Auditor will have to obtain evidences in the form of reports, opinions, valuation statements on many terms. Like let's take some example. Valuation of certain types of asset, for example, land, building, plant, machinery. Say in a entity, there is revaluation of some asset. Okay, and we are not happy with the way that they have conducted the entire valuation, things like that. There, if the amount is too material, and if we need an independent opinion, we can always appoint an expert and get a valuation done. For example, if there is diamond or any precious metal in the entity, and if we are not happy with the valuation, we can get an external expert appointed and get the valuation done. So he becomes a auditor's expert. Determination of quantities of physical conditions of asset, for example, underground mineral, petroleum reserve, remaining useful life of plant machinery. Wherever we appoint experts for our comfort, if the amount is quite material, then we do that, then it becomes then he is our expert. Another example is determination of using of specialized techniques, methods like actuarial valuation, measurement of work completed, to be completed for contract which is in progress, legal opinions concerning interpretations of agreement. All these things, when we appoint, then he is auditor's expert. When management appoints, then it's not a auditor's expert, it is management expert. So each of these item, when you are looking into, you must be thinking in your mind that all these things we never appoint, but we do appoint when it is necessary and essential. It's not that in all cases we go ahead and appoint, but when we appoint, it is auditor's expert, and when management appoints, it is not. What is the objective? To determine whether the use of working, whether to use the work of the auditor's expert, if using, to determine whether that work is adequate for the auditor's purpose. It is not that any Tom, Dick, and Harry can do the valuation of something, or determine some value, or identify some goods. We have to assess whether that person is appropriately working, so that the work done by him actually can be used as audit evidence. When we determine the need for an expert in the field other than auditing and accounting, if it is necessary for us to do that, we took an example of precious metal, we took an example of refinery, actuarial expert, anything. Then if we determine that his involvement is necessary, then we go ahead and follow this standard, in the sense how to use that work that the other person has done who is an expert, how to use that here, and not like with closed eyes relying on the work that is done by him. We have to assess the competence, capability, objective of the auditor's expert. Now, competence is whether he is fit for the job, whether he is ability, whether he is capable of doing it, whether he will be able to deliver the results. So we will have to assess his experience, professional qualification. So generally you have this checklist in which you will say that what is the name of the expert, what is he being used for, what is his area of specialization, what is his background, what are the assignments that he has handled, how do you determine that he is an expert, does he have professional qualification qualification, and also whether he is independent. Independence is most important. We have to take an independence declaration also. The objectivity of the expert, how well will he handle these matters, how do you know that person, have you seen his work somewhere else, and things like that. All these objectivity will have to be looked into. Now, when we appoint an auditor's expert, we look at competence, capability, objectivity, independence, and all that thing. And then we appoint him for doing his work. Now, the next important thing is when he does the work, how do we actually use his work as our evidence? That's more important to us. If we appoint someone and then he does his work, but we are not able to use his work, then it is of no use. So, for us, what is important is how do we use his work. So what is the nature, extent, and timing of the audit procedures that we will have to conduct? So the nature, timing, and extent obviously varies, because audit is not something that is very fixed, and there is no fixed way of doing things, because it depends on situation to situation, and it varies depending on the complexity of the business or the type of the audit evidence and things like that. Few of the things that the auditor can consider is nature of the matter to which that expert work relates. What is the matter that is under question, and what is it that we want the expert to do? That's very important. The RMM in the matter to which the experts work relate, matlab, whether it is a significant risk to the entity or whether it is not a significant risk to the entity. Generally, when an auditor is going to the extent of appointing an expert, it seems to be a significant risk for the audit itself. The significant for that expert's work in the context to audit, so it will be higher as we are appointing independent expert to evaluate. So I assume that we will not do it for any area and every area, but we will do it only for selected areas, and obviously that is why it becomes of high importance. Auditors knowledge and experience with previous work performed by that expert. So whether we know him, how does he work, and how does he complete his things, and what are the outputs that we get, and how much reliance that we can place on the expert is something that is very necessary to understand as well. Whether that expert is subject to the audit firm's quality control policy and procedures. So if he is within the firm, then he will be actually subject to the same rules, regulations, and quality controls that you are supposed to. So what does this mean? Is that whether that person is reliable, whether that person is subject to the quality control the way our firms are subject to. So we have review mechanisms, we have consultation mechanisms, we have engagement quality control reviews, we put our disclaimers and things like that. Do they have those things applicable to them? If they're part of our firm, then yes, obviously it will be the same thing that will apply to them also. But if they are from a different firm, then we will have to look at these things furthermore carefully. Auditor has to obtain understanding of the field of expertise of the auditor's expert, so that we can determine how we can use that work, and also to evaluate adequacy of his work. So how to evaluate the adequacy of his work? What is the method that is used? For example, for valuation of shares for the purpose of ESOP, say if you have to do it under Black and Scholes method, if it is a listed company. For actuarial valuation, you have to do it under project unit cost method. So you have to have basic knowledge, and then you have to have some understanding of how the valuation is done, what is done. So you may not be having expert knowledge, but then you have to have some high level understanding of that. Then the next thing is agreement with the expert. You have to define what he has to do. So the EL that we are talking about, if he is within the firm, then obviously it's not necessary. If it is outside the firm, then you have to do what is his scope, what is his role, objective. Then confidentiality should be one of the matters. So that is why all these things will be applicable to those people within the firm. So it is not necessary to make a separate engagement letter. But if he's an outsider, then the engagement letter has to have all these things, because confidentiality is of utmost importance as well. And then the regular communication between us and the expert, and the closure and the report formats also is to be agreed well. Then how do you evaluate the adequacy of auditors experts work? Auditor has to evaluate the adequacy of auditors experts work for the purpose of audit. How do you do that? The relevance, reasonableness of that expert's findings, conclusions, and consistency with other audit evidence. What does that mean? What is it that the expert has done? For example, if you are talking about precious metal valuation, say if there are diamonds to value, so company has done certain assumptions and it has also done the valuation on the basis of existing market value. Now you appoint an auditor's expert and then compare that, and then compare the inputs and compare the outputs, and also look at what is it that he has valued and how much is it relevant for us. If there are differences between us and the management's expert and the other expert, then we will have to question, understand, again discuss with the expert, and if it is acceptable, take it on to record, and if it is not acceptable, then maybe adjustments are necessary to that effect. Another example is when we take the actuarial valuation of leave encashment, gratuity, anything. This is very basic. We have to document the input data that is provided to them, which we have to verify on sample basis that whether accurate and complete data is going to the actuary. That's number one. Evaluating the output, also looking at the actuarial report, because we are looking at actuarial report of various entities. So we know what is the government return, that is return on plan assets, what is the percentage that has to be taken for discounting, because generally the discounting rate will have to be in tandem with the other factors of the entity. Then the attrition rate, then the joining rate, all these things we will have to anyways evaluate, whether it is management expert or it is auditor's expert. And when we do that, if there are differences, then we will have to again consult the expert. So the objectivity and the final conclusions that the expert provides will have to be questioned. So it is not to be taken, filed, and matter is closed, matter is over. No, we have to understand what they have done, how it affects our financial statements. If there are differences, what is it that we are going to do further? There are many cases in many reviews. If you see the regulatory reports and things like that, one common observation that you will see is lack of professional skepticism in use of experts' work. This is the statement that you will find in many cases. What does that mean? That means when a expert has done his work, you're taking it and filing it in the file and matter is over. So many a times it so happens, he has written two observations also in it, but then that is not further audited and concluded. There are differences between management expert, auditor's expert. They are not compared. The evaluation is not done, not documented, and not concluded. Maybe the differences are materially different material also. So these are the matters that actually bring in this kind of comment. What is professional skepticism in terms of use of experts, data, experts output? Professional skepticism, obviously, you don't get overnight. It comes with experience. We all know that professional skepticism is something that is, do not take anything it for face value. Always ask the question why, what, when, how. So you have to do that, and you will have to compare, you will have to evaluate, you will have to discuss, you will have to document the reasons, and then only conclude on the issue. So professional skepticism here is very important. It's not that we don't understand that area in detail. That means whatever he has done is right. So that is the point over here. We have to evaluate, and we have to conclude, and we have to question the conclusions if necessary, and also look at those inconsistency with other matters if we have taken. That's why I gave that example of actuarial valuation. So generally we look at it. For example, I'll give you one live example. In one of the in one of the cases where I was auditor, the leaving rate was taken as X percentage, where when we calculated the attrition rate, it was at a higher percentage. So when we asked the actuary, when we asked the client to calculate, they told us that no, this is appropriate. We appointed an auditor's expert. We got that recalculated again, and then compared both the reports. There was a difference, and because of attrition rate being taken higher, the provision did vary. Okay. Because it was gratuity calculation, obviously, if the attrition rate reduces, the provision will increase, because stability of of people denotes increase in gratuity provision. So that kind of matters can happen. So we have to keep our professional skepticism awake, and we will have to look at the reports in detail and ensure that there are no inconsistencies, and we use the conclusions and the outputs appropriately, and we do not close our eyes towards that. If that expert's work involves use of significant assumptions and methods, relevance and reasonableness of those assumptions should be considered. So that's when we spoke about this actuarial example. There are assumptions like return on plan assets, there are discounting factor, there are mortality morbidity factor, there is joining rate, there is attrition rate, there is appraisal rate, there is experience adjustment, service cost. All these things we can very much look into and develop a sense of it, and then start questioning on it. So this portion of this slide actually applies to both work of management expert as well as work of auditors expert. So similar things we will have to do in both the cases so that we reach to the right conclusions. If that expert's work involves use of source data that is significant to that expert's work, relevance, completeness, accuracy of source data is to be verified. That's when we spoke about again valuation, actuarial valuation, that the input data has to be verified whether it is complete or accurate. Because if your input data to the actuary is going wrong, then your output will be wrong. Similar is the case with share valuation. So if the input is going right, then only your output will be right. And because your P ratio and other things will depend on how your input data behaves. If there are too many projections inside those valuations, then you may have to take appropriate haircut or the discounting rate so that your valuation is more appropriate and to the level to which you are foreseeing how it will have to. Documentation of this entire challenging of auditors experts work, or the management experts work is very essential. How did you look at the assumptions? Why did you challenge the assumptions? What are the grounds on which you did that? What is the discussion? What is the comparison? What is the conclusion? Did it have a material impact on the financial statements? How did you adjust it? If you've not adjusted, whether it is below threshold, whether it is below materiality that you ignored it. So detailed documentation of all these factors is very much necessary in the working paper. In case the auditor determines that the auditor's expert's work is not adequate for the audit purposes, then auditor has to agree with that expert on the nature and extent of the further work that it has to be done. So I wanted the valuation of certain things to be done, but then it is done in a manner that is different than what is expected, or the output is not something, that the assumptions are not appropriate, the output is not appropriate. If we see that, then we will have to advise him as to what are the next steps that he has to take. And if there are conclusions that are actually different than what we expected, we have to do further audit procedures. That's when I said that if there are differences, how do you sort out the differences? If it is material, then it may affect the financial statements, it may misstate the financial statements. If not, then it has to be concluded in a proper manner, and if it needs any further audit procedures to be done, one has to do those further audit procedures and then only conclude. So auditors expert, so I don't know this area, I'm appointing an auditor's expert, he's giving me a report, so I'm taking it and filing it, my audit is over. Which is not true. I have to do all these procedures. I have to perform all these procedures so that we can adequately conclude on the matter. The next important thing that is there in the standard is working papers of auditors internal expert as well as auditors external expert. We have to have all the workings that they have used here. So what do I mean by that? Say there is a litigation that is going on, tax litigation that is going on in my client, and I involve my tax expert who is partner in my firm to look at the entire litigation data and then conclude as to what is the probability, whether it has to get provided for, going into what do you say, a contingent liability, or the possibility is remote, so PPR analysis and things like that. all the input data, all the output data, all the workings that he has done, all the citations that he has done, everything has to be documented on our file. For example, if you are taking a share valuation, their entire working is also part of our file, and that is why we have to preserve it on our audit file. The principles that apply to the audit file of archival within 60 days equally applies to auditors experts work. So either a firm has to have a policy that he archives his work within 60 days, and if he is an external person, he also should archive his work within 60 days. And the safest way to do is take all the working to us, and then we archive the file in 60 days, which is actually everything living at one place. Instead of that, if you have from some other department, some guy doing your work, he may lose his working, and then you may be in a risk over there. So take all the work that he has done, and then you have to ensure that your work is appropriately documented. So whether it is an internal person, external person, all the working. So this is another clause that you will have to put in your agreement, that all the working that you will do will be part of my audit, and that is why I will take it from you, and then I will archive it in my file. If you want, you can have copies of it. However, I need it completely, so I am taking it with me, and then I'm archiving with my file. So that's another important thing, because many of the people miss out on this, and there are issues as to how this working was done and how these conclusions were reached. Communication between auditor and auditor's expert. It is necessary to document all the minutes of meeting and other interactions appropriately, and also the conclusions drawn. Confidentiality. Auditor's expert is also bound by confidentiality restriction. We talked about assumption, method, source data. Documenting these things are very, very necessary as to how did we verify the source data, how did we look at the methodology, how did we challenge certain things, and then also how did we challenge the professional skepticism, how did we use our professional skepticism, and how did we challenge using the work of other expert. I think all these matters will have to be covered very much in detail. So in short, whenever an auditor is using work of anyone else for his purposes, to ensure that he actually acquires evidence out of the work done by others, it may be other auditor, it may be other expert, it's not a easy or a cakewalk. Everything that the other person does have an impact on the auditor's work, and that's why it's necessary, mandatory, that everyone actually auditor actually documents all these things very much in detail, and nothing should be left out for chance, because these may have serious implications as such. Now, how do we make a reference into the auditor's expert in the auditor's report in case of an unmodified opinion? If we agree with the auditor's expert's work and there are no differences, there is nothing that we have to refer to. If at all we want to make a reference to, we can make reference to, for example, in insurance company, the management expert is actuary, and we do make a reference to other matters. This is granted by RDA regulation itself. In case of modified opinion, if that is in case of qualified opinion based on auditor's opinion, auditor's expert, if we are qualifying our opinion, please do not think that this is going to lessen our responsibility and relieve us from something. The responsibility of the qualified opinion still remains with us as auditors, and auditors experts' work is only an audit evidence for us. Overall responsibility, because I'm signing the report as per 705, still remains on me and not on the not on the auditor's expert. So I'm using that work. So whatever he has done becomes my audit evidence. That in no way reduces my responsibility, but it gets included under my audit evidence, and I can still qualify to that respect that I have used my auditor's expert, and that is why I'm qualifying this. Generally, there are no instances where we have seen that a reference is made, but then you can choose to make because standard gives you that leeway. I think that's all I have to share on 600 and 620. Which are quite actually heavy in content, I would say. Though they seem to be lighter, they are heavy in content. Open for any questions or suggestions, thoughts, or sharing of any experiences.
Madam, can you hear me, madam?
Yeah.
Yeah, thank you. Wonderful deliberation, and you have covered all the aspects of this using the others works as well as the other auditors works as well as the experts. I have received 2-3 questions relating to the topic. If you permit, can we ask the same questions, madam?
Yeah,
Yes,
sure.
When this first question is whether the component necessarily signifies that it is always a related party to the reporting enterprise.
Yes. It will fit into related party definition as per section 188, as per Ind AS, everything. It is a related party. Now, whether it is a significant component or not is a different issue, but then definitely it is a related party.
It is a related party. It is a parameter to review or evaluate other auditors' work in a suggestive manner. But how would you counter with that work of your co? Will if it make a difference, and how would you view it as an independent auditor?
Okay, so if I've understood the question rightly, you're saying that you can evaluate, but then how can you step into the shoes of the other auditor and you can say whether it is right or wrong, right? So basically, the group audit instruction is your measuring tool to send you a group audit instruction, and that is why I'll take a step back and say that when we are doing a group audit, we need to understand all our components better. It's like for a mom understanding all her kids better, just on a lighter note. So you have to understand all your components better and what is happening there. So when you know those things, and then the component auditors become your further extended eyes and ears, so that they report back to you as to what is it that is happening. And you have to carefully evaluate the work done by the other auditor and then pick up points or nuances. And you can ask questions yourself also by looking at the financials. If you see that, okay, at the beginning you have said that, okay, PPE is a risk area as we discussed, but then at the end of the year and balance sheet, there are new intangibles that have been added, or the datas have gone up drastically, you can ask them for an explanation over there in your final analytical review, in your additional questionnaires, or in additional documentation of additional discussions that you do. So you cannot step into their shoes and decide what is right or wrong, but that person is also a professional who is bound by certain rules and regulations to appropriately do the audit and report back to you. And you have to use your professional skepticism to ensure and understand that you're looking at the things in an appropriate manner. So that is why it is necessary that you don't take it and put it on the file and close it across.
Yes. Madam, then in this case, having relied on the report of an expert, what is the responsibility of the auditor if it is find out at a later stage that there are omissions and incorrect calculations in the report of such an expert?
Yeah. So, there are a number of cases as we discussed today. Regulators are looking at that, auditors are taking a auditor's experts valuation. They're just keeping it on the file. They are not questioning it. That is when it is necessary for us to use our, ability to understand how does that happen and then question it. It is, again, we cannot take it and file it. We have to question the assumptions, the methodology, the general things that you see in a entity. All these things will have to be questioned and will have to be documented. So documentation is the only thing that comes to your rescue. So if there are inconsistencies in the calculation itself, that other expert is also a professional who will be subject to certain rules and regulations. So it can actually trigger an evaluation of his work also, but at the same time, it is you who has used it as audit evidence. So first trigger will be on you. But if you have these things listed down properly, documented properly, then it can act as your savior to certain extent. But if you have not done that and then just taken it and put it on your file, then definitely you will have trouble over there. You have to document all these evaluations, and that is why you have to evaluate the work, discuss the work, and document those minutes as well.
Ma'am, is it necessary that auditor should be of the same firm or other firm, or if it is necessary to maintain the documentation, if auditor and the expert auditors belong to the same firm?
Yeah. So it can be a situation where, for example, you are from a very large firm. For example, you have valuation as a separate department, you have tax as a different department, and you have various people who actually are experts, and you use them, involve them in your audit to get some comfort. But then I may be from a different size of a firm where I don't have all the expertise. We are, say, 4 partners and we do only audit. So I may come to your firm to ask for help that this is a complex area, please help us in this. And then you may help us. But then for me to understand and evaluate, so that document becomes part of my audit evidence, because use of auditor's expert is nothing but my audit evidence. So if I'm giving you some work, the work that you do is my audit evidence. So I will have to document it, because in future, the second question that you asked is that how will you prove that you are responsible and you have seen it? So to prove that, I will need documentation from you. So at the time when my review happens, I can't come running to you. It's better that I take it and document it right now.
Yes. And is there any necessity or your expert opinion to maintain the competency of the expert auditor?
Yes. So ideally, make a small checklist and put up all the questions at one place. It's available on, I think, in few referencer and documentation also. Use of expert checklist, if you search for, there are lots of documents that are available. So it will be basically covering about who is the person, what is his professional qualification, number of years of experience. Have you looked at this expert in some other of your client? How did you find his work? What are his technical capabilities? Any renowned projects or contracts that he has done? Basically, you ask for a profile from him, and then you see whether it suits you, and then you document. For example, the same instance that I have taken, I may come to you, I may come to 2 other firms for help. Okay, then it is for me to evaluate and see who fits my case, and then I will take either your help or some other firm's help. To evaluate, I will look at your profile basically, and what type of work that you have done, and how much expertise, and what is your market the general information about your firm in the market. I'm just giving it as an example, don't take me otherwise. So I will just collate all that information, and then make a decision that, oh good, this person's firm is good, let me go there and take a opinion from there. So that evaluation, what I do at the time of taking help from someone else, is something that we will have to document.
Yes, ma'am. Thank you so much, ma'am. One last question.
Yeah.
Can auditor's expert opinion may lead to the qualification?
Yeah, it can. So let's take the instance that I gave is increase in gratuity provision. So management had also done the actuarial valuation. We were not happy because we tried explaining, we tried arguing. They did not actually agree to us. So we got an actuary appointed, and we got the valuation done. Difference was material. Okay. So they agreed to adjust at the end of the day. If they did not agree to adjust, then we would have qualified, because the difference was material here. The company, agreed to make an adjustment to that effect and take an entry. That means make an additional provision to that effect, because it was material. So obviously it ended up in a no qualification scenario. Say if the company did not agree to do that, then we would have qualified. We have no other way but to qualify.
Yes, ma'am. So now we come to an end, ma'am. Thank you so much for sparing your valuable time out of your busy schedule, and you have justified with your presentation, and you have covered both the standards using the work of other auditor as well as the auditor's expert. And we have gained a lot. Actually, I have gained a lot through your deliberation. Thank you so much on behalf of Auditing and Assurance Standard Board. I extend my heartiest thanks towards you for sparing your valuable time. Thank you so much, ma'am. Thank you.
Thank you so much. Thanks for the opportunity and thanks for the patient listening. Thank you so much. Thanks for all the questions.
Thank you so much, ma'am. Thank you, ma'am. Namaste.
Namaste.